Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains. And this week we're going to be doing two separate topics, but they're very interconnected. So first we're going to start with a little bit of a Nike overview and then an earnings preview because they report their fiscal fourth quarter 2018 earnings this Thursday. And then we're going to do a sportswear overview because Puma, if you haven't heard already, made a pretty big splash last week, and they're entering into a new sport they haven't been in a really long time in the United States. But like I said, we're going to start with Nike. But before we get into any of that, I just want to remind everyone, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com because we always appreciate any feedback that any listeners have. So as I was saying, we're starting with Nike. This is a pretty highly visible time for Nike. The NBA draft just happened, and Nike is the official sponsor of the NBA. They have about 90% of the basketball shoe market here in the United States. And then it's also, we're in the middle of the World Cup, as most of you know, and so they're on the world stage along with Adidas and a couple other big sportswear companies. And now I just want to talk a little bit about their fundamentals and then preview what our Zacks estimates are saying about what the company's going to do, and then just kind of go from there. So over the last 10 years, Nike has done extremely well, as many of you would expect. Their stock is up 390% over the last decade, and this is as of last Friday, which is well above Adidas, which is up 250%, and the S&P is up 130%. So Nike's been doing really well for the last decade. The picture changes a little bit when you shrink our view. So over the last 5 years, Nike's still outpacing Adidas. They're up 147% compared to Adidas at about 120%. But then in the last 2 years, things kind of flip, but not in the way you would necessarily expect. So over the last 2 years, Adidas is up 58% compared to Nike at 37%. And this is a lot to do with Adidas' big North American growth that a lot of people have talked about at length, including myself. But then over the last year, Nike stock is actually up 40% and Adidas is only up 17%. So it's kind of Adidas has slowed down over the past year, and quietly Under Armour is up big since the start of 2018. They're up 57% since the start of this year. So the picture on the big scale, Nike's up huge compared to everybody else. But then as you shrink it down, things look a little bit more congested and a little bit more where you don't really know how it's going to shape out over the next couple of years, and that's for sure. Now I want to talk a little bit about Nike's valuation picture. As of Friday, they were trading at 27.7 times forward 12 months Zacks consensus EPS estimates. So that's forward PE. That's at a premium to Adidas, which is at 21.2, and the industry in general is at 21.6. So you're paying a premium for Nike, but it's Nike. You've been paying a premium for Nike over the last 5 years. This is nothing particularly new. So that's their picture. They're at about their 5-year high. They dipped down over the last 2 years, but now they've come all the way back up. They've hung around this range for a while now. So there's nothing new there. I just wanted to give investors a little bit of a picture of Nike's valuation if you didn't know what was going on at the moment. And then as well, their actual stock price is hanging around its 52-week and all-time high. So it's certainly not looking like a steal at the moment, but it could certainly grow based on what I'm going to talk about right now. So over the last year, the talk has been that trends in the North American market are changing. They certainly are, and this has negatively impacted Nike as well as Under Armour and a lot of other clothing retailers and retailers in general. So last quarter, Nike's overall revenues were up 7% to just under $9 billion, but North American sales slipped. But footwear sales, which is their biggest category, slipped 8% to about 2.3 billion. And right there, just North American footwear sales is 25% of Nike's overall business. So those trends can't continue unless they somehow grow a lot other places. So that's something that investors in Nike really want to pay attention to going forward. Overall, their North American sales were down 6% and to about 3.6 billion. And that, once again, is accounting for 40% of their business. So it's not like Under Armour, where North America is almost 75% of their business. So it's not the end of the world that there's been some new trends in North America impacting them, but it's not obviously a good thing for Nike or their investors. But what is good is that they are growing everywhere else. Europe, the Middle East, and Africa, which is a category that a lot of retailers use, they were up 19% there, with footwear up 17%. So they were about 2.3 billion, a big market. Greater China, they were up 24%. This is a market that Nike is going to pay a lot of attention to going forward as China's middle class grows and grows and grows. And then in the last category, which they classify as Asia Pacific and Latin America, they were up 13%. So the smallest growth out of their international markets, but everywhere was growing but North America. And now I just want to preview just the top and bottom line for what's expected this fourth quarter. So based on our Zach's consensus estimates, Nike's fiscal Q4 revenues are expected to climb by 8.2% to $9.39 billion. So 8% growth, about what they did last quarter. They were at 7% last quarter, so that's good. And then their earnings are exposed to jump by 6.67% to 64 cents per share. But really, what investors should be looking at this Thursday is the North American market coming back at all? Because after they've had some declines over the past couple of quarters, Nike has said this is going to stop, where we've done enough to where we at least expect sales to be flat in North America. Mark Parker, the CEO, came out in March and said, we now see a significant reversal in the trends in North America, so investors should expect to see roughly flat U.S. sales. And the big issue, if you don't know at this point, is that the retailers Nike used to rely on, like Finish Line, Foot Locker, Dick's Sporting Goods, in almost any traditional brick and mortar retailer in the U.S. has just seen their sales decline. And now going forward, Nike is making a huge direct to consumer push. They're also even working with companies like Amazon, but a lot going forward is going to be Nike's online presence, direct to consumer, which in the long run is going to be better for the company and better for investors because it's just going to mean higher margins. So that's what you should be paying attention to on Thursday when they release their fourth quarter earnings. And now I want to shift a little bit more towards the broader picture for Nike in terms of why they still have the presence that they have and why they are still Nike, and then jump into this broader sportswear market. Nike has they've spent heavily to grow internationally. We've seen, as I just mentioned before, it's paid off in a big way. Since 1994, when the U.S. first hosted the World Cup, they've spent billions of dollars to grow into what's now a soccer powerhouse. They sponsor some of the biggest soccer players in the world. At the World Cup this year, right now, they're sponsoring 10 out of the 32 teams, which is just behind Adidas, which is it started as a soccer company where Nike was not a soccer company at all and didn't really get into soccer until the early 90s, like I said. And then out of footwear, Nike, which is the business that all of these retailers really care the most about because it's the most expensive, Nike soccer cleats are hugely popular at that elite level, where ESPN did their top 50 players at the World Cup, and 26 out of the 50 are wearing Nike cleats. Adidas only has 20. So that's what I'm talking about, is that they still have a presence, unlike Under Armour, who has no presence at all. They don't even have one team they're sponsoring at the World Cup, whereas a company that's now making a big splash in the North American sportswear market for the first time in a long time, Puma, has 4. And that brings me exactly to what I want to talk about. And the second half of this episode is Puma SE. It's a German listed company. They were started by the brother who started Adidas. I spoke about this on a podcast a while back that was sort of the history of Adidas. So the brother of the Adidas founder, which is Adi Dassler, his brother Rudolf started Puma in 1948. In much like Adidas, it started as a track and soccer focused company. Internationally for a long time, and I was not growing up in the 60s or 70s. I was not born yet. But in the 60s and 70s, Pele was one of the most famous, not just athletes, but one of the most famous people on the planet. He won 3 World Cups for Brazil wearing Puma shoes, wearing Puma tracksuits, which they're slowly bringing back, so watch out for those. They had another big, basically the three biggest soccer stars of the 70s, the 60s, 70s, and 80s were Puma athletes. Pele, Johan Cruyff from a Dutchman, and then Diego Maradona from Argentina. 3 of the biggest names in soccer history, all were Puma athletes. And then in the early 70s, they got into basketball in the United States for the first time. In 1973, they sponsored Clyde Frazier, who was a New York Knicks star back when the Knicks were actually good at basketball, even though they're still a world famous team, but they just haven't been good in a really long time, but they're always on national TV because it's New York City. But that was a little side note for myself. And then I was doing some research on Puma, and I didn't know that at one point Serena Williams was a Puma athlete, even though now she's Nike. They signed her right before she became the person she is now, where she's just winning every major in women's tennis. And then you also have, which is still pretty much the face of the company today, Usain Bolt. They signed him in 2008, and then he became a world famous athlete for 3 Olympic cycles in a row, winning the 100-meter men's final gold 3 World Cups, Olympics in a row. But the problem is he retired after the 2016 Olympics. And for a lot of people, including me, when I think of Puma, the only thing I think of is a guy who ran track, and I am never buying track cleats in my life. And he no longer even runs track. So that can't be who the face of their company was going forward. And it turns out that is certainly not the case and not their plan. But I want to get into a little bit of what's happened recently that's led to this new push in North America on the sports side. So they were owned for a while by Kering. It's this luxury holding company from Paris that owns Gucci, Saint Laurent, Alexander McQueen, and a bunch of other luxury retail brands. And they bought a majority stake in Puma in 2007. But then they just sold it a couple months ago, just because they thought it was a good time. This industry was shifting. There was a lot of competition. They wanted to dump it. So they sold all of their stake in Puma. It was always independently listed, but they just owned most of the company. So they're back on their own again. And one of the first big things they did, now that they're out from under this luxury umbrella, is they're jumping back into basketball. They have not been in basketball in North America for 20 years, and now they've signed 4 NBA draft picks, and their plan is to say, hey, we have to be back in sportswear on the performance side if we want to grow our streetwear side, which this is something I had no idea what was going on, and I kind of feel a little embarrassed because this is something I pay a lot of attention to, is that Rihanna has been a Puma sponsor, and she's obviously a world famous musician, and she signed with the company back in 2014. And I guess she's really driven sales in their women's line, and the company in a lot of their press and financial releases will point directly to her, saying she's hugely responsible for our resurgence, not only in North America, but all over the world. So that's really interesting. And what's also really interesting, so they have Rihanna, a world famous pop star, and I was talking about this with someone at work recently because I was looking up something about athletes and their presence on social media, and I had if I had to hazard a guess at all, I would never have thought who the most followed person in the world is on Instagram, because The Rock's up there. I also did something with The Rock, but the most popular person in the world on Instagram is Selena Gomez. 138 million followers on Instagram. So Instagram, if you don't know, is owned by Facebook. They just reached 1 billion followers, or 1 billion users. So it's a hugely popular platform that is really helpful in today's age, where you're often trying to sell to younger kids because they have a disposable income from their parents often. So this is where they want to be. So they have Selena Gomez as a Puma. She's not an athlete, but they're also getting into what Adidas is doing as well, which is this streetwear fashion as well as sports. So they have Selena Gomez, Rihanna. They have Carla Delevingne, who is an actress / model who has 40 million followers on Instagram. One of the Jenners, Kylie Jenner. They have The Weeknd, who is a rapper / artist. Big Sean, who's a rapper. So they've really just gone into do what Adidas did with Kanye West and Pharrell Williams. They're doing just sort of a little bit more under the radar, or at least for me. Because when I think of Puma, I think of Ricky Fowler, who's the golfer who became famous for wearing these completely orange outfits when he was a little younger, with Puma all over the place. He's quieted down the bold colors, but he's still one of their only notable, in America especially, their only notable sponsor. Then there's some soccer players, Antoine Griezmann of France, who's doing pretty well in the World Cup right now. Lewis Hamilton, a big Formula One race car driving star. And then they just signed Romelu Lukaku, who plays for Manchester United. And then this gets me to what their new plan is with basketball in the United States, because Romelu Lukaku is a Rock Nation sports client. They're a sports agency and a music agency, and that agency is owned by Jay-Z, and Jay-Z was just hired by Puma to be the official title. At one point, a bunch of companies and news outlets reported that he was the president of basketball operations at Puma, which turns out not to be what his title is at all, because that's an NBA term. He's a creative consultant for Puma. And last week, it just came out that Jay-Z signed this deal with Puma, and they instantly signed 4 NBA prospects who all got drafted in the lottery. They signed DeAndre Ayton, Marvin Bagley III, Zaire Smith, and Michael Porter Jr. DeAndre Ayton and Marvin Bagley III went number 1 and number 2 in the NBA draft. And there's not details out yet, but supposedly Marvin Bagley, who played at Duke for just his freshman year, signed the biggest rookie shoe deal since Kevin Durant. And Kevin Durant is a hugely famous basketball star. So for Puma, just out of nowhere to go from we haven't been in basketball for 20 years to now we're just going to sign someone to the biggest contract since Kevin Durant. There really seems like they're just going for it. So we'll see how that goes. I think it's a relatively good idea. They signed their first NBA veteran as well last week, Rudy Gay. If you're a hardcore NBA fan, you know who that is. And then they also signed their original Puma basketball star Clyde Frazier, who's now a broadcaster for the New York Knicks. They signed him to a quote, lifetime endorsement deal with Puma, and they're releasing Clyde shoes, which look very similar to, they're super old school, super 70s, which is coming back in a big way. They're all white with just the Puma little, it looks like a ribbon almost on the side of their shoe, but it looks very similar to what Adidas has done with those Stan Smith, just flat bottom white sneakers that you're seeing all over the place these days. But their actual basketball performance shoe is going to cost $120. It's coming out in October, and it's called the Clyde Court. They have, I'm not sure if this is exactly what it's going to end up looking like, but they have the model out of it now, and I actually think it looks pretty cool. And this is totally obviously, people can say there's a bias. I think it's better than all of the shoes Under Armour has put out for basketball right away, and it's the first mock-up. It blows away all the Curry shoes. It kind of looks like what Adidas is doing. It's colorful. It's a mid-top. It looks like some of their James Harden shoes for Adidas. So I think it's a cool place to start, and it's just shows you that you have to try, because a lot of people will say that these actual sports sponsorships of these athletes might not work out. But if you don't have any presence at all, then why would anyone buy your basketball shoes if no one at an elite level wears them? That's just sending the wrong signal. If you never saw an elite race car driver driving a Mercedes, why would you want to buy a Mercedes as a person who really likes a car? You would just assume that then if the best of the best don't think that a Mercedes is good enough to win a race, then why would, as a guy who wants to drive fast on the weekends, why would I buy a Mercedes? So that's my view of it, and people can have their own opinions about that. And then I want to just read a quote from the director of global marketing from Puma, because he sort of agrees with my line of thinking here. And he said, if we're going to be successful in the U.S. in the long term, we have to return to our performance category roots. And then he kind of went on to just say how they wanted to sign these young, up-and-coming, possibly stars, because obviously Nike already has the big stars, Kevin Durant, LeBron James. Under Armour has Steph Curry. They're not going to steal those guys away from those companies, so you got to start somewhere. And eventually LeBron, even though it seems like he could play till he's 50, they'll be out of the league. So you might as well start young and hope one of these guys like Marvin Bagley III becomes a transcendent star. Who knows? Everyone on draft night, it just happened last Thursday, will say this guy's a surefire Hall of Famer, but you never know. They probably said that about a guy 5 years ago who's not even in the league anymore. So that's all up in the air. But one thing to definitely pay attention to is how important these non-sports stars are, these non-athletes, the Rihannas and the Selena Gomez, and Jay-Z's presence to attract these basketball players to come to Puma brand. I mean, I just heard an anecdote recently that in 2010, when LeBron was leaving Cleveland, he ended up going to Miami. The only reason he met with the Brooklyn Nets was because Jay-Z owned like 0.5% of the team, and he was in one of the meetings, and they just wanted to. The only reason, so that does matter. I know it's going to sound like a broken record at that point, but it really, really does matter. And as we wrap up, I just kind of want to look at the overall basketball shoe market and the sportswear market in general, since for the longest time, everyone said Under Armour was the heir to the throne, but that seems like it's less likely these days. But overall, basketball footwear was down 4% in the U.S. over the last year as of April, and this is according to NPD Group, which is a big retail tracker. Right now, it's Nike's owning 90% of that market, Adidas is in second. Obviously, Puma was nowhere to be found until just recently, and they won't even sell shoes till October. And then Under Armour is third behind Adidas. And then if you do remember last year, it was big news when Adidas passed Jordan Brand just in the regular footwear sneaker market in the United States behind Nike. So as of last year, these are the most up-to-date stats I have, that Nike in general, for all shoes, not performance or basketball related, they owned 37% of the sneaker market in the US, with Adidas at 11.3, and then Jordan Brand, which is owned by Nike, at 9.5. So they have almost 50% of the market on their own, Nike. So they have a big lead. And if Mark Parker if what he's saying is correct, they're slowly going to regain the footing they've lost there recently. And then for reference, because I was even a little shocked when I looked this up, I thought Nike was a lot bigger than Adidas, but the gap, I mean, it's still a big gap, but it's slowly closing. So this year, for the full year, their fiscal 2018, Nike's expected to pull in $36 billion, and Adidas is expected to pull in $26.5 billion. So still $10 billion less than Nike, but I, for some reason, thought it was a lot less than that. And then for Under Armour, for reference, they are way smaller still. They're expected to make $5.17 billion, and then the only stats I found last year's stats, so not the estimates for Puma. So last year, for the first time ever, Puma surpassed 4 billion euros in sales. At the time, it was about $4.8 billion. And they said that all of their regions were up double digits, and shares of that company, which is listed in Germany, are up 38% so far in 2018. And then in conclusion, I just want to wrap up with a little bit of where this market is going. So I've already talked about how Puma's jumping back in, not only with basketball, but they've slowly been doing it with this more fashion-forward, almost runway kind of European look that they're using big international music stars to promote. But they're opening a flagship store on Fifth Avenue in Manhattan. It's going to be their first location, big flagship location in North America. And Nike, Under Armour, and Adidas all have Fifth Avenue stores. So they're now going to be competing directly against these. The four of them are all now in this one area. They're saying these are the four biggest sports retailers in the world. And Puma's ready to really surpass Under Armour, and I would assume pretty quickly, especially when you consider, and I've talked about this before, is that Under Armour doesn't have this appeal off the court. I mean, you can like Steph Curry's shoes and you might wear them to play basketball, but I just ask you, besides 12-year-olds, have you ever seen anyone wearing Steph Curry basketball shoes outside of playing basketball? I would probably say no, and obviously that's being a little facetious, but I just would say that in the long run, Nike, for their recent declines in North America, Nike and Adidas have a long-term trajectory to keep growing. Puma has been growing quietly without a lot of people in the United States knowing, because they're not a publicly traded company here in the U.S., though maybe that could change going forward. But their presence now with all of these entertainment stars and jumping back into basketball in the States could prove to be hugely beneficial, whereas Under Armour is just kind of, they're caught in between their roots of where someone like The Rock's clothing and his shoes have done really well for Under Armour, but that's more of this workout performance gear that they became known for, while they're also trying to do this fashion forward thing that really just hasn't cut out for them. So it's going to be really fun to watch these trends going forward, because everything can change so quickly in retail and nothing lasts forever, especially if you're not always trying to stay ahead of all these fashion trends and what's next, because that's how Nike slowly lost a little bit of market share in the US. But that does it for another episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.